You almost closed the app. It's 11:40 on a Sunday night. You opened your bank for one boring reason, to make sure a payment cleared before Monday. It did. Your thumb is already on its way out. Then a line near the bottom of the screen stops it. $12. Service fee. Same line, same spot, every month for the 7 years you've banked here. You do the math without meaning to. $12 a month. 7 years. A little over $1,000. For a line you never once agreed to pay, in an app you open all the time and have never actually read. And here's the part that makes you sit up. It isn't the $1,000. It's that this fee, the one you just found by accident at 11:40 on a Sunday, is the smallest of six quiet settings scattered across your account, nearly all of them flipped to the bank's side the day you signed up, each one deciding how much of your own money you keep. So I pulled the fee schedules, the deposit math, and the page of the agreement nobody reads. And I found all 6 and the switch that flips each one back. None of this is about being rich or being broke. It's about which of the 6 are still set against you, right now, tonight, in the app on your phone. Let's flip them. One at a time, starting smaller than the one you just found. Switch one lives lower than the line you found, at a 0 balance. And it's the one almost nobody realizes is a switch at all. Overdraft coverage. Here's the part the word overdraft hides. On an everyday debit card purchase, overdraft coverage is usually something you opted into, often without knowing it. Switched on, it tells the bank, if I don't have the money, approve the charge anyway and bill me for it. The fee for that approval is often around $35, frequently far larger than whatever you were short. Switched off, the bank just declines the charge. The purchase doesn't go through. Neither does the fee. And this switch isn't set the same everywhere. Overdraft pricing swings wildly bank to bank. Some still charge around $35. Some have quietly dropped it to a few dollars or to 0. Some give you a grace window to fix it first. The penalty that feels like a law of physics is often just which bank you happen to walk into. Switch one is 2 clicks. Turn the coverage off so a shortfall declines instead of compounding. And no, a no overdraft account is a real, free thing you can move to. The cleanest switch on the board, sitting at the rung where people assume they have the least power. And here it is, the line that stopped your thumb on Sunday night. Switch 2. $12, sometimes $15 a month to hold an account. The way to avoid it is usually to keep a minimum balance you don't have, often around $1,500. So the fee stays, and you end up, in the most literal sense, paying rent on your own money. But 3 pages into that same fee schedule, the part nobody reads, that fee almost always has a waiver printed right beside it, a single direct deposit, or switching to electronic statements, or a lower minimum account tier at the same bank. The $1,000 you found at 11:40 on Sunday was never mandatory. It was a condition sitting in a document the bank is required to hand you and counting on you not to open. Switch 2. Read the one page with the waiver, flip whichever trigger is easiest, or move to a genuinely free account. That's the line gone. And it was the small one. Because here's the one that's actually worth more than your car. Switch 3. And unlike the first 2, it never shows up as a line on any statement, which is exactly why it's the most expensive of the 6. Your savings account pays you about 1/100th of 1% on $5,000, roughly 50 cents a year. Meanwhile, the bank takes that same $5,000, lends it and invests it, and earns vastly more. The difference between what they pay you and what they earn on your money has a name, the spread. And it is essentially the entire business model of a bank. Your idle cash is working extremely hard, just not for you. The switch is almost embarrassingly simple, and it has the biggest dollar gap on the board. A high-yield savings account. Same FDIC insurance, the same $250,000 protection, often the same app, has recently paid in the neighborhood of 4 to 5%. On that same $5,000, that's the difference between 50 cents and a couple $100 a year for identical money at identical safety. Leave a real balance there for years. You don't have to beat the spread. You just have to stop donating it. Switch 3. Cross into the tens of thousands and the relationship inverts. Your credit limit rises on its own. A real person calls and introduces themselves as your banker. A fee you'd have eaten at the bottom gets reversed in one email. Read it clearly. This isn't the bank respecting you. You crossed the line where your account became profitable to keep, and profitable accounts get courted, which switches on a lever you didn't have before. You can ask. At this level, fee reversals are routine, loan rates are negotiable, and a competitor's better offer is something you can mention and watch your banker match. Switch 4. Use the leverage. Ask for the reversal. Ask for the better rate. Make them compete. The worst answer is no, and they say it far less often than you'd expect. 6 figures, and the bank gets quieter and warmer at once. A title shows up, preferred client. A named advisor remembers your kid's name. And the selling, for the first time, stops looking like selling. It looks like advice. That's the switch to stay most awake on, because it's engineered to feel the least like a transaction. The line that protects you. A product is something the bank wants you to buy. A consultation is something the bank wants you to need. The managed accounts and in-house funds with the friendly names carry the fees where the real margin now lives. And you're completely allowed to smile, say, no thank you, and keep the relationship. Switch 5. Know the difference between a product and advice. And remember, the boring tools still do the work. A low-cost index fund and that high-yield account from Switch 3 don't stop being right because someone with a nameplate offered you something fancier. Preferred is a label, not a gift. $1 million, and the switches stop hiding. The banker comes to your office. The mortgage rate isn't published. It's negotiated. Minimums get waived. Deals reach you before they're public. Losing you would show up in someone's performance review, so the institution quietly arranges itself around keeping you. But look closely, because this is the switch the whole climb was built to reveal. Nothing here is smarter than you. The rate is negotiable, which means it was always negotiable. They're finally bothering. The minimum is waivable, which means it was never a law. The fees are optional, which means they were optional at every rung below this one too, including the $12 line you found on a Sunday. The millionaire isn't getting secret treatment. They're getting visible treatment. The curtain pulled off a machine that was running the entire time, at every balance, including yours. So here's what your bank actually does. From 0 to $1 million. It runs 6 switches, almost all set to its own side by default. And it prices you by exactly one number. How profitable you are to keep. The cold shoulder at the bottom and the leather folder at the top are not two banks with two hearts. They're the same machine, seen from two ends. The bank was never cruel when you were broke, and it isn't your friend now. It was running settings the whole time, including the one that stopped your thumb on Sunday. And that's the part that should lower your shoulders. If the fees were about you, about being a problem, being careless, being less, there'd be nothing to do but feel it. But it was never about you. It was 6 settings, defaulted to someone else's benefit, every one of them yours to throw. So, back to Sunday night. 11:40. The line that stopped your thumb. You know what it is now. That was switch 2, the waiver switch, and it turned out to be the smallest of the 6. You found it by accident. You can turn it off on purpose tonight, before you put the phone down. You won't throw all 6 tonight. Nobody does. But you don't have to. You just have to stop being priced without your consent, one switch at a time. Turn off the overdraft. Flip the fee you already found. Move the idle cash. Ask for the reversal. Decline the fancy product. The most expensive thing on the whole board was never the fee. It was not knowing the fee was a setting. Here's the one I'd sit with before you sleep. You're already in the app. Which of the 6 is still set against you? I've put the rest of the banking teardown in one place. Start there. Meanwhile, I'll keep reading the fine print.